Good morning. Welcome to Forex In Four. Today is Monday, November 7th, 2011. Alrighty, this morning we're starting out with the euro because we just can't seem to shake the headlines coming out of that region. So we know about what was going on with Greece last week with the whole debt deal, and you got Papandreou's essentially game of political chicken there, where he really tried to put it to his opposition party to get everybody on board to accept the terms of bailout and all of this stuff. All right, and apparently over the weekend they were able to come to some sort of agreement, which is actually going to hasten the departure of Papandreou, who said he would resign after a new coalition government is formed. So it looks like they're going to form a coalition there in Greece, and hopefully everybody's on board with the terms of the bailout deal there. And that's it puts a little bit of political pressure on the situation because there's no guarantee that the new coalition government is going to agree to or to take all the steps necessary to receive continued money from IMF, ECB for the bailout. So there is a little bit of political risk in there, but by and large the market sees this as a good thing, and it's this kind of thing where all right, Greece is settled, let's put it in the rearview mirror, let's turn our attention to the bigger fish. The bigger fish right now is Italy, whose bond yields are surging right now ahead of tomorrow's budget vote. Now, Prime Minister Berlusconi over there, this guy's quite the character. I don't know if people are familiar with him, but do a quick Google. You'll see he's not known for, he is known for politics, but more importantly, he's apparently the Don Juan of Europe these days, and spends a little bit more time, trying to chase women than to fix Italy's economy. So there were rumors going around that he lost power, that he was going to resign, but he's fighting the good fight. So we're going to have to see what happens in Italy. He just survived a confidence vote a couple of weeks ago, but this time it may be different. So now we're looking at a new potential government in Italy ahead of tomorrow's budget vote. Now, the budget vote, they were supposed to slash budgets to continue receiving IMF and ECB and Eurozone aid. We're going to have to see how that goes. But right now there's some risk going on in Italy. All right, bond yields are going higher. As we know, as yields go higher, makes it harder to service the debt, and that's how the domino starts to go. So Europe's a little bit goofy right now, and you're just looking at the 30-minute chart. You can see here we pulled back, all right, and we actually bounced just ahead of 137 there. We bounced a little bit higher on the euro. So we're going to keep an eye on these situations mounting in the Eurozone. But this week is... it's kind of weak for data. I don't want to say it's not important, but right now, also taking place, we had Eurozone retail sales that came in worse than expected. The monthly number was a negative 0.7. They were expecting negative 0.1. They were expecting the year over year to be negative 0.5. It was actually negative 1.5, so that's not good. The Centex investor confidence in Eurozone was worse than expected, negative 21.2 versus negative 20. All right, and then industrial production in Germany came in worse than expected as well, 5.4% for the month versus an expected 7.2%, which also that's the year over year. The monthly was negative 2.7 versus an expected negative 0.9. So that's what's going on in the Eurozone. But right now you can see that we're sort of bouncing here a little bit higher because people think that if in Italy Berlusconi's out, that's actually a good thing. So as the rumors in Italy pick up that he's leaving, that's actually better for the euro. If it looks like he's staying, that's actually worse for the euro. Okay, they want him out apparently because of his ineffectual government style. Let's take a quick peek at the pound. Pound's actually up a little bit. You can see here that they had, what was it? Employment confidence came in worse than last month, negative 72 versus minus 67. But home prices fell. Actually, they came in a little bit better than expected. 1.2% gain versus 0.1% expected. And right now, the pound is receiving a lot of the money flows that may be leaving euro due to the risk aversion going on there with the problems that they've got. I just want to show you euro Swissy. We haven't looked at this in a while because of the peg that it's been on, and it's just sort of been sitting right in this range. And you can see here for the past beginning of the month, well, all of a sudden now euro strengthening versus Swissy, and you're going, wait a second, I thought there were problems in the Eurozone. Why is euro strengthening? Well, one of the things going on is that CPI data in Switzerland came in, and it showed a decline of 0.1% versus an expected gain of 0.2%. The unemployment rate stayed steady, 2.9% for the month, and 3.3% for the month. Very low unemployment. But the problem is that if they think they're getting deflation there, okay, then they may need to do something about the currency, and that could be a weakening situation in Switzerland. So we're going to keep an eye on that. But the Swiss franc weakening a little bit more versus euro. So this week's going to be kind of a light week, as I mentioned. There's not a ton of news coming out from the U.S., but we have a lot of Fed speak this week. So these guys are going to be coming out juicing the market. We've got some actual numbers that are coming from China this week, which could be pretty important. On I think it's Wednesday, we've got their industrial production figures and their retail sales. We have their CPI data as well on Wednesday, so that's going to show where their inflation is, what they're going to do with rates. We also have trade balance figures for China. All right, and what else? Their money supply and new loans figures as well, which shows, if they're lending money to consumers, that shows, that they're either growing. If they pull it back, it means that they're looking to shrink a little bit. Some other things happening this week. Talk to you about the pound real quick. They've got their GDP estimate on Wednesday, and they also have the Bank of England interest rate decision on Thursday. Now, they're not expected to change anything with the decision on Thursday, but they did increase the asset purchase program last time around, so that's one of the things we're going to keep an eye on. And then rounding out the week, we've got, whoops, what happened here? Looks like I've got a hanging chart here. Let me go back to the Aussie. Oh, Aussie, boom. Okay, here we go. It looks like the pound is also just sitting around. So we've got Australian unemployment report, and that's really what we're looking at for the week. So not a ton of news coming out from a data standpoint, but there's going to be a lot happening as far as all this news from the Eurozone, what happens with the votes, and it's sort of a continuation of last week, what we've been seeing as far as, it's not necessarily data points you can hinge upon, but really what the overall sentiment is based on the politics behind it. So that's what we're looking at. It's going to be an interesting week. Again, I still think it's a short-term trading season and a good time for traders with high volatility. If you're a longer-term investor, maybe look for just to really nail those entry points. So that's what I've got today, folks. Good trading to all.